Everybody, it's Kevin and Patrick from NorthStarBadCharts.com again, and we're really thrilled to welcome back Justin Smyth to talk about well, all sorts of stuff. I think there's been a lot of interesting stuff going on this last week or two, and we're poised at some very interesting sort of crossroads at the moment, I think. So yeah, let's see what Justin's got to say, and I'll shut up and let Justin start talking.
Yeah, it's great to be back on you guys' show. Yeah, unfortunately, the markets this year have been extremely choppy. I think on the screen here, I'm showing a chart of IWM, which is a Russell 2000 small cap ETF. And I think I talked to you guys back in June, and we talked about how choppy the market was. And when the general trend of the market is not moving higher, then stocks across all different sectors and groups tend to struggle. And that's really what we've seen since February this year. We had like the GameStop, like the stuff going on with Wall Street bets that went kind of crazy in February, and then and the silver squeeze was going on then too, and then we've just been in this choppy environment since then, which you can see on the chart there. So it's been a lot different year than 2020. But recently things have been changing. I mean, you see the IWM here. It tried to break out in early November and got pushed back down from another stock market correction. But underneath the surface, there's actually a lot of sectors that are showing new leadership strength, and maybe I'll talk about those next. I think I posted about XLE, which is an energy select spider ETF, oil and gas stocks, and I think Patrick actually messaged me on Twitter and asked me, like, thought that was pretty interesting. And here's an example of, if you see what this did in November against the rest of the market, you can see how it kind of went sideways, went down a little bit, but came back up when the rest of the market was under more pressure. You can see on this down here, it's actually still outperforming the S&P 500 too, which is important because you want to be targeting the sectors that are stronger than the market.
Justin, I know that is that's the ratio, right, that you have in that XLE, but it's not the Mansfield, right? The first indicator pane.
That is the ratio, yeah.
It's a ratio, okay.
I always have SPX as my denominator, and then whatever I'm looking at is the numerator. So it's just dividing the two, and whenever it's above this blue line, it means that it's outperforming the S&P 500. So another example would be semiconductors is actually one of the strongest groups in the market right now. You can see how it's extremely higher than the market, and it just broke out actually right when the market got under pressure. So to me, this is the leading group right now in the market. I've got a 20-day moving average in green right here, so it's even holding the 20-day moving average. And notice how it like, the first 3 days of December is when really things got hit hard, but notice how it bounced back up and actually gapped up a couple of days ago, and now it's just like closing the gap a little bit. I mean, these are all kind of bullish type of behavior, in my opinion. So I think another one is home builders. Home builders, again, popped right up right during this correction, outperforming the S&P 500. So you have three examples of groups there that are starting to diverge from the rest of the stock market. That's a good sign, because when corrections are over, you want to have new leadership breaking out. And that's kind of what I've been observing actually over the last month or so.
Have you noticed, I've been looking at the energy sector as well, and just looking at wholesale energy prices and how it relates to inflationary pressures and all that kind of stuff. And certainly over here in Europe, and certainly here in the UK as well, we're seeing energy prices leaping up at some kind of historic rates that I don't think we've ever seen before. We're 4 times the seasonal average highs here in the UK, and for energy prices. And we've seen I think it's gas prices, natural gas prices, moving up 1,200% in the last 18 months. Incredible sort of moves, taking us to levels we've never seen before, and they haven't come crashing back down either. They've been at those sort of levels for many weeks now, and that to me sort of suggests a sort of element of locked in price rises. Producer price index, I noticed in the US, the PPI index has broken out and is moving up rapidly. And of course, producer prices will feed on to consumer prices, and the consumer price index almost inevitably, I would imagine. So do you have an overall view on kind of inflation, I guess, inflationary pressures? I mean, you know, are markets generally across most sectors likely to just kind of take it in turns to surge ever upwards, handing the baton from one to the other? It's kind of the feeling I'm getting at the moment, is that it's just an almost inevitable surge that's just going to continue for some time yet.
To be honest, I try to stay away from headlines. I just try to focus on the charts and try to understand what the charts are telling me. I know there's a lot of, like, inflation is one of the main worries right now, I believe, in the market. I know there's Omicron and Evergrande have been kind of headlines too.
Yeah.
Certainly it's going to affect the market somehow, but I think it's going to show up just in what we're observing in the price action. So that's really what's most important. I mean, a lot of people are probably confused, like, why is gold's not really moving when there's so much inflationary pressure? And I don't really know what the answer is. And to be honest, I don't really care. I mean, I just want to trade the chart.
Yeah, of course.
And gold's really been just in a sideways. Am I still sharing my chart? I think, like,
yes, you are. Yeah. You've still got your screen.
In a sideways consolidation all year. You haven't, like, as soon as it moved into stage 3 and stage 4 a little bit in early 2021, like, this breakout in May didn't really have the power behind it that previous breakouts did with the volume that, you know, that you would want to see. And it's just continued to move sideways and base this entire year. And actually, I was like looking at, I mean, gold's done this in the last 5 or 6 years. If you look at 2017 and 2018 are good examples of when gold went sideways for most of the year, really, and just did nothing. And that was after the 2016 rally kind of petered out. So you just had a big base form. And then that's what really, you had this monster base, which it broke out from in 2019. So for gold to base for an entire year is not out of the ordinary. It just happened a couple of years ago. Certainly gold is on my radar for 2022. You could easily break out of this base again. And that's just what I'm waiting for. I'm not going to trade it until I see a breakout. I've tried dipping into gold stocks. Just the last one I tried was gold royalty, which I really like the pattern in this one, but it kind of broke out here on volume and was kind of getting tight and maybe ready to set up for a breakout, but it just didn't have the gold market behind it. Like, the gold stocks need the gold market behind it to move higher. So they've all been stuck drifting sideways to a little bit lower because gold's not behind them.
That's a very important point. I think me and Patrick have been talking about this just recently, and it's I think it's really important to identify the sectors, like you've been talking about there, the sectors which are breaking out. Because if you get an individual stock in a sector and the individual stock is breaking out, but the sector isn't, and the underlying commodity, for example, isn't, if you're talking about silver and silver miners or gold and gold miners, you can get these sort of localized surges in some of the stocks, but they almost always kind of resolve back downwards again, unless the underlying commodity or the market behind it is sort of breaking out in the same direction. There are always going to be, you know, a very small number of exceptions to that. I'm thinking about Kirkland Lake in particular, I think, for the gold miners, but in the vast majority of cases, exactly what you said there, you can't expect it to continue its breakout and move upwards unless the market that it's in does the same.
Even Kirkland tried to break out a couple of months ago and failed just because the gold market's not behind it.
Well, I think what Kevin was referring to is, if you zoom out, put the 10, 20 years of Kirkland, Justin, and you'll see that Kirkland actually went ballistic while there was a bear market. Because look at from 2017, when gold was consolidating, look at Kirkland. But that's an outlier. This is exceptional what was happening here.
Yeah, you're right. I remember this because it was on the IBD 50s, like one of the top stocks, and the rest of the gold market really wasn't responding at all because gold was not doing much. So this was certainly an outlier and doesn't normally happen. Normally, any gold stock needs the gold market to be moving higher to. And you see this in the when you're studying breakouts, like looking at your daily charts, like looking for stocks breaking out. if you see a wave of gold stocks breaking out, that tells you that things are starting to happen and that it's time to get into that sector. And we just haven't seen that for months now.
There's one other thing I've been looking at as well, is gold priced in other currencies, because quite often when gold breaks out in US dollars, it does so first in multiple other currencies, whether it's the euro, the British pound, the Japanese yen, or I've been looking at the world currency unit as well, which is an amalgamation of currencies. And some interesting moves taking place in those, and they are tending to lead a little bit at the moment, and they're all looking pretty bullish at this point. You know, we've just hit a fairly important support level.
With the dollar inverse ETF. So yeah, you can see here that this is actually kind of a stage 2 breakout here out of a nice base, and it's kind of retesting it right now. But yeah, certainly the US dollar has been the strongest currency, I think, over the last 6 months. So not totally surprising. And it's like you said, it's probably good. We've seen this before where gold's broken out in other currencies first, and then it tends to follow in the US dollar later on.
Justin, how do you scan? Honestly, some people ask us like, Patrick, do you have a scanner? How do you find these stocks? You know, what do you use to, let's say you see gold's breaking out, and your mindset's going to say, okay, I want to check what stocks in the gold sector. How do you find how do you?
I have like 3 different scans I run every night, and they're basically high volume scans, like stocks breaking out on volume, and they have to be above the 30-week moving average for me to be interested, because it's not a stage 2 breakout unless it's above the moving average. So that's really all I scan for. And then I just go through the charts and I try to find stocks that look like an ideal buy point for a stage 2 breakout. And that's really all I do. So I run my scans every night, and I go through the charts, and then I just whittle it down to stocks that look like stage 2 breakouts.
But is that what we could find on the nextbigtrade.com, or it's something else that you're not sharing?
Well, you can go to my screener at screener.nextbigtrade.com, and that'll give you also an ability to find stocks that are breaking out on volume. I think on the watch list section, that's kind of what that's for. But I would really recommend getting your own charting tools as well, because I think you guys use TradingView. I use stockcharts.com. It's really important to be able to like mark up charts and analyze things in different time frames and stuff, which you can't do with my screener right now. I'm not sure if I'll get that functionality in there at some point, but you need to I like to look at the daily and the weekly time frame. That's really just all I look at. And I think you need to be able to you need to have a tool that's got flexibility. So I think I would recommend getting TradingView or stock charts.
Oh, all right. I want to see, there's if we go like circle back, let's say to the energy there, I saw that you did the ratio of oil to the energy producers, and then there was something interesting happening there.
Yeah, I showed this chart, which is a ratio of XLE to crude oil, and you can see a stage 1 base here, and then a breakout recently over the last 3 weeks. It's interesting because the oil and gas stocks have not been outperforming oil this entire year, even though they've been in a stage 2 uptrend. So I think it's probably still early in this stage 2 uptrend for this sector because of something like that. You typically are going to see a lot of outperformance later on in the uptrend. So that kind of tells you that it hasn't happened yet. And, you know, maybe there's not as much participation in this sector yet, but all these stocks, like if you look at Chevron's one of the leaders, it barely moved down during this correction in the market. And actually it's breaking out of this big basing formation. So, and it broke out into stage 2 way back in early February this year. So, and again, like it's breaking out at the tail end of this sideways bear market. So that tells you that there's leadership here. This is a new, even though the sector's already been in an uptrend, it's now a new leader for like maybe the next market uptrend, which I think we're getting fairly close to.
Okay. let's say the market we're talking about, let's say the SPX, right? So that's the index, the market.
Right.
Well, what's the weight? Because that's the thing. Because let's say these home builders, energy, let's say these commodity sectors or whatever, let's say they're the new leaders, but is the weight of let's say the capital, like let's say tech or some other one starts being a laggard, could the index still go sideways with a few sectors still going up? Because I'm just wondering if these things are going up, the energy sector, is that enough to keep the SPX afloat, or it like?
Well, that's actually a good point, because really what happened for, like Apple's showing to me that it's kind of a leading stock again. It's breaking out on volume over the last few weeks, again, right at the end of this tail end of this bear market. But there's been a lot of sideways action in some of these major mega caps too. So the market has been, like the market initially coming out of the COVID crash, the mega caps pushed the market up. Then they went sideways for 6 months. And then the rest of the growth stocks, I think, pushed the market up. And then now the last 6 months, again, the mega caps have really been holding the market up, because as you saw with IWM is so weak because, there's like, I think 25% of the NASDAQ is down 30% this year. There's some major carnage in a lot of stocks. Like if you look at like Peloton, I mean, this stock has already destroyed its entire advance from last year. Like Zoom's another one.
That's a great lesson not to hold when you're in a stage 4 decline, guys.
This is a great example of stage analysis.
Wow.
Stage 2 breakout back in May 2020, stage 2 uptrend, a topping process for a lot of this year, and then a move into stage 4. So you've got all 4 stages right there in a period of 2 years. Really, there's been no reason to be in Peloton this entire year after it broke down below the 50 or 10-week moving average, which is a 50-day. That's a negative sign for me. I mean, so it's breaking down. Then it's getting into stage 3. I mean, it kind of moved up on volume here, but it's still underneath the moving average. So that's not good. Then it just, finds it as resistance here and just moves lower. And I mean, unfortunately,
I was just going to say, I think Patrick's point about weighting is probably quite important, actually. I don't know too many people think about it that often. I suppose I don't really, because I'm sort of looking very much at gold and silver and mining commodities and that sort of thing most of the time. But when you're looking at the general stock market and the S&P or the Russell or whichever index it happens to be, the FTSE over here in the UK, the bigger these companies become, of course, the bigger the weighting they have in their respective markets. So I guess Facebook and Amazon and Google and the Netflix type companies, as they grow to enormous, Tesla, of course, grow to enormous sort of market caps, they must weight the overall stock market ever more. So
well, here's
I guess what I'm saying is that you can end up with 10 companies, for example, that, if they're doing well, then, the index does well, regardless of what the other 90% are doing.
Yeah, you have to be careful with indexes, because you need to know the weighting of them to really understand what they're showing you. Like here's the S&P 500 equally weighted. So you can see that it's really just sideways since May, with it's starting to move higher actually though here, that's a good sign. But again,
that's an interesting chart, actually. It's not one I've thought about before.
What does that mean?
S&P. So is that basically assigning, sort of, well, exactly what it says on the tin, really, equal weight to every company in the S&P, so they all have an equal part to play.
And that's exactly what it is. So look at this compared to the SPX. The bias on the SPX is a little bit higher because of the weighting with Apple and Google. Google's been just in a it's kind of consolidating now, but it was really in a strong uptrend earlier this year.
Interesting. I don't know if you can able to zoom out onto the monthly on that and just see how that compares over the last few years, whether it makes a big difference.
It's really just been, since the end of 2020, really accelerated with Google specifically. Before that, it was really just kind of staying steady with the rest of the market.
So it's moved up 3 times since 2019 by a factor of 3.
You know, would be interested is to do Google divided by the SPX equal weighted. So if Google really outperforms the equal weighted, I don't know what I'm trying to say.
It sounds like a rabbit hole to me, Patrick.
I know.
Yeah, it's been outperforming like just like the normal index, but really just more recently. So it shows you how stocks, there's different leading sectors all the time in the markets, and things are always changing. You saw gold and silver were really strong last year for a little bit. Now it seems to be semiconductors, home builders, and oil and gas seem like three emerging sectors to me. There could be more. There's other themes, like there's like this metaverse theme that there's a couple stocks like Roblox and Matterport or two that I've been looking at that look, like this Roblox just completed a stage 2 breakout earlier in November. And so there, when the market's healthy, these themes are going to lead. I don't know when the commodities are, how they're going to fit in. I still think uranium is probably going to be a leader again if the market resumes higher. I mean, it hasn't really broken down fully from this stage 2 uptrend, and it's been under pressure recently, but everything else really has been. So I think uranium is probably in the best position to resume of most of the commodities that I've looked at. And then there's oil and gas, obviously.
I agree with uranium. I think it's very early in its overall bull market, and it's moved quite a long way fairly quickly in the last sort of 18 months or so, and it makes sense that it cools off to an extent. And if you look at the uranium ETFs, they've become quite extended. You've got the Global X uranium ETF there, did become quite extended for a little while. It's just kind of fairly normal price action and resetting at the moment, isn't it? But I think with the global agenda that's behind clean energy, it's hard to imagine a scenario where uranium doesn't do exceedingly well.
Right. And again, it's because of the recent pressure on the overall market is probably why this happened. When the market corrects, it just brings everything else with it. So, but the strongest survive, and they show you that what could be a leader after the correction, because if it's so strong during a correction, it means like the institutions aren't selling it for the next move higher.
Yeah, I notice you that's what you look for, the strength amidst the market weakness. You look for the next leaders. So
strength amidst the carnage is one of the best indicators of what's going to lead next. You saw it really, like if you go back and look at Zoom during 2020, if you see on the lower left side of this chart, like during the COVID crisis, it was already breaking out into stage 2, and almost all their stocks were getting destroyed, in February and March. So then it really just took off higher. Gold did the same thing. Gold really rebounded dramatically in March, and then there was a big move higher in the middle of 2020 last year. So relative strength is a key indicator for finding the best stuff after a market correction.
Yeah, well, that's why I'm looking at your ratio there, GLD to SPX. As soon as it crosses above that blue line, it should be a breakout at the same time.
Yes, definitely. That's what you want to watch. So you just got to be patient. I think we talked about being patient back in July when I talked to you guys. Unfortunately, it's still the case right now. Unfortunately, markets can go sideways for years at a time. So one other thing to look at, I want to show you guys I've been watching, like this Brazilian ETF, just to show like this is one of the weakest things in the market since June. Like, see how it just went straight down and was moving into stage 4 and stuff, but it actually bottomed in October on high volume, and then it's actually starting to make a double bottom and then a move higher on a little bit of volume, like while the rest of the market's still getting hammered. So to me, this is showing that the weakest stuff is like starting to resist the carnage. And if the worst stuff can't go down, it means that the best stuff is probably going to start moving higher again. I mean, this could just find resistance again and move lower, but this is a good sign to see some of the worst acting things show a little bit of support. I mean, this is going on in like just the general emerging markets ETF2. It's kind of finding support again. And this is in the face of, again, like the small caps really crashed lately, but the EWZ bounced over its October low. So this is very
the emerging markets are key, I suppose, in relation to commodities and commodity currencies.
Exactly.
So if you're looking at the Aussie dollar or the Canadian dollar, or these countries that are sort of heavily commodity based, then that all sort of ties into the overall roadmap or the overall theme and story for commodities, whether it's gold, silver, uranium, whatever it is. It's just a general trend that you're looking for, and you're putting all these bits of the jigsaw puzzle together to find the evidence that that inflation and commodities are going to be a big play over the next few years.
That's a nice, I love that chart.
It's a great looking chart. And this is Petrobras, which is a Brazilian oil producer, actually one of the biggest oil producers in the world. And yeah, you can clearly see a stage 1 base, or actually kind of a continuation breakout here. But yeah, and like this happened in the face of market carnage. This is an oil stock and a Brazilian stock, and it's showing you strength in the middle of weakness.
So this one should be a leader. So this one, the gains should be.
Well, look at it. It's up almost 6% again this week. It broke out last week. So
we'll have to start covering that one, Kevin.
Well, yeah, it looks like it's breaking above a horizontal neckline there, doesn't it? So
exactly.
it's a good move. Yeah.
Hey, Justin, can you zoom out to add as many years as you can? I just love looking at the. Wow. Okay. Interesting.
Yeah, Brazil has been in a wasteland ever since like the commodity boom from 2000 to 2010. It's been look at this base now. This is a multi-year base, and it's an oil stock, so it's got both of those going for it, and it's really kind of breaking above this resistance now. So
hold on, I'm logging into my broker right now. Just bought a few shares.
So this is this is where you have to look at the charts in the middle of the headlines are inflation, craziness.
Yeah.
Just calmly look at this and say, hey, this is an example of strength of a new leader, and it's defying what you're hearing from the television, which I don't listen to any financial media whatsoever.
What? You don't listen to CNN, CNBC? What's wrong with you?
And therein lies the beauty of the charts, doesn't it? Because everything that those headlines are going on about, it's irrelevant because it's all built into the charts. If it's going to break out, the chart will tell you. If it's going to break down, the chart will tell you. It doesn't matter what the narrative is.
And Justin, Kevin's almost finished reading Stan Weinstein, so he knows these, like in the first chapters when he talks about those casino stocks in the 80s that nobody wanted. Casino stocks sucked, and he didn't care. He bought them in a bundle.
Yeah, Stan Weinstein does not care about what anyone says about the market, the financial media, any opinions. I mean, it's just the charts and just trying to get in sync with the charts. What are the charts showing you? That's all that matters. I mean, they're not always going to be 100%. They're going to give you whipsaws here and there, but you're going to get major trends right by just continually studying the charts and letting them tell you what's going on in the market.
Exactly. I mean, then the story follows the chart, and I always go back to the Ripple chart, and when that was crashing down, and everyone said it was going to zero because it was being delisted and all the rest of that, and yet the chart said, well, no, that's not going to happen. It's going to bounce at this point, and it's going to go up, and it's going to keep going up, and that's what it did. It tripled, quadrupled in price when it hit the support line. So the chart can pick out those levels where you kind of like, right, at that point there, when it hits that level, something's going to happen and the price is going to turn around. It doesn't matter what the headlines are, but they'll find some justification for it, and it happens time and time again. It's amazing.
The media always has a bearish headline to promote. I mean, there's always something bad going on in the world.
Yeah, you'll be paralyzed by fear. Honestly, if you like, let's say in 2008, it scared everybody, right? It had a great deflation event. Well, in 2011, when the U.S. equities started their insane bull run, if you would have stayed in that fear, there's going to be another deflation event, there's going to be another one, you missed you missed 12 years of the profits.
Exactly.
Yeah, exactly. And when gold was 1,000 and when gold was $1,300 and breaking out, if you were sort of paralyzed by the fear of thinking it was going down to $1,000 or below, which was a quite a widely held opinion at the time, and if you'd ignored the charts and ignored all the signs and the signals and the breakouts that were occurring and the back tests that occurred after the breakout, you know, the absolute textbook beautiful patterns that occurred in gold when it broke out at that 1300 sort of level. If you'd ignored that, then you'd have totally lost, you know, you'd have missed out on the whole bull run, which was, you know, crazy there. You can see when it broke that horizontal line, it's about $1,350, $1,400. You can draw a straight line across that chart.
Yeah, we talked about that last time. I think like this was a monster base that it broke out from and made a huge run.
Yeah, and I see what's happening now as a smaller version of the same thing. I mean, it looks similar in a way, which is scaring some people, to what happened in the period around 2011, 2012. It's got a similar look to it, but you know, you draw your support line and resistance line.
Never anticipate the chart.
No,
just let it do its thing. Let it.
You took the words out of my mouth. I was just about to say, you draw the support line, you draw the resistance line, and that's what makes your decision for you. If you can stay completely unbiased and just don't have that bias in your mind. I played that trick this week on some of my Twitter followers and flipped the charts upside down just to try and challenge people's thinking a little bit. But yeah, the chart will tell you. You kind of don't need to anticipate it.
Exactly. There's gonna be whipsaw. There's, you know, a few whipsaws here, but at some point it's going to make a decision. It's going to trend again. So just wait for that to happen and trade other stuff in the meantime while gold's doing this. So.
Exactly. Yeah.
Hey, Justin, thanks for coming there after I beat you there. I know I like hearing your market recaps. You do the homework for me essentially, because now I know what to look at.
Oh yeah,
it's great stuff. Yeah, I've got to say, you know, fantastic having you on the show, Justin, and we really always appreciate listening to your views and your analysis on the markets. It's you know, it's very much appreciated.
Yeah, thanks guys. I really appreciate talking to you guys too. And I mean, Patrick's been like, we've been connected on Twitter for a while, and just recently with you, Kevin. So I mean, it's just great to connect with you guys again, and it's awesome to hear that Kevin finished Stan Weinstein's book. I mean, that's a great book, and I'm just going to add to your arsenal of market knowledge, I think. So
it certainly is. Yeah, he knew his stuff, and I bet he'd love to be doing it all with TradingView and all the techniques and technology that we have today at our disposal. It makes it a lot easier for us.
Really, it really does.
Yeah. Okay, that's great, guys. Really appreciate the chat. And Justin Smyth from thenextbigtrade.com, and of course you can find him on Twitter. What's your handle on Twitter, Justin? For
Next Big Trade. Next Big Trade on Twitter.
There you go. Cool. Fantastic.
All right, Justin.
Thanks,
great stuff, guys. Till next time. Bye for now.